Welcome to yet another video for Cryptopocalypse Now. I am your host, CR, and I'm having a lovely day. How about you? Alright, so this is a perfect opportunity to talk about a setup that's developing here on this chart. What do I have on? I have my latest Armageddon with the sell signal at the top here going down. We have a punch-out bearish setup closing below. We're expecting price to hit lower targets. Let's remove this junk right here. We don't need it. So in this video, I'm going to show you how to trade this chop range. So you can see our balance risk management panel is open is 2829. Okay. And if you're starting out, this is probably a nice little account to practice with, but this is not to say that I don't care about losing this. This was actually requested by someone in our Discord to demonstrate how to grow a $1,000 account to 10,000, which I think is going to take a couple of years, but once I have it up to 10,000, whenever that happens, I will be able to run you through the realities of what it takes to build it up to that number. It's gonna take a long time, and I can't possibly see how this would be interesting to document every day. But I am recording videos on little trade setups like these, just to show you how this works. And so, for perspective, right? Many people out there don't have that much money to trade with, and they do, but they're not starting out with their full capital, of course. So they want to test the waters, and this is going to simulate their experience, right? What would you do if you had this number of USDT in your wallet, and how would you trade this? So right now we're looking for this bearish punch out to bring us down. There's been a sell signal over here, a loss of momentum. It looks like we're resetting now. Technically, we should be in as scalpers. This is the pyramid, right? We wait for it to print a wick, a low, a range low, and then we enter. So in our case, what we can do here is use a limit order real quick. Let's go to our chart, okay? Let's put a stop at the low because this is what the strategy calls for, right? And then we are going to calculate our risk based on this stop loss. We will risk 1% of our account to the upside. We'll get a fill, and we're not doing any take profit targets just yet, but we're just going to get in on a trade. There we are, we're in. So here we're losing 1% of our account if we're wrong, but we're trading this Jackrabbit setup, which says that when we have a Jackrabbit print, we need a candle that prints a low, bounces, and this is our entry point. And so we then put a stop loss once we're in, and we take profit at the first sign of resistance, 90%. After that, we put a stop loss in, and we take it from there. This video is going to be like the futures trading video, where I will demonstrate how to manage risk effectively here, right? So front running this signal, the expectation is that we are going to perhaps cross over the baseline here and attempt to go long. But right now we're acting on Jackrabbit. So it prints, sandbag, pulls the price down, it puts in a low, you get in wherever you like, you exit on the first sign of resistance, which is pretty damn close. So we can only hope for a breakout here, because this shouldn't be an issue if the market sentiment is bullish. We already set our stop loss, and we're going to have to sell once we exit this trade 90% at the first sign of resistance. And imagine this price breaking the baseline, which is our second confirmation to go long. But then that might also be the top and maybe a fake out. But in this way, we're simply putting a stop loss below the wicks over here, holding, and let's see what happens. Now remember, it's 1% of the account. We can do this 100 times until we lose all of our money, right? 1%, 1%, 1%. But every time you lose that 1%, you have to make a little bit more than that in order to stay ahead. Now, for all of you people out there who are thinking that account size matters, it doesn't, because the principles are the same. You can do this with $1 million worth of position as long as it's 1%. If you're trading with $1 million and that's your 1%, what are you doing trading? You know what I'm saying? So Jackrabbit, we have a second instance right here. This is a 15-minute time frame, and we're just going to wait. If it stops us out, we will look for another re-entry. Remember, this is a bearish punch out to the downside, so price can go down to this level. But we're not going to be catching knives. We're going to be acting strictly on confirmation signals, okay? And so far, we are bearish according to the system, right? So we're $51 below our entry. And this is okay, just like with the futures video, it's fine. You can lose up to 4 or 5, 3 times. And if you exceed your total losses for the day, then you have to get out. This calculation is a little different from futures, but it's more flexible. And you shouldn't worry about it. Yes, we're buying into a red candle. Yes, we have a Jackrabbit setting up. Yes, we have 2 lows that have printed and bounced. I don't know what they're bouncing on, what kind of moving average or a support zone or whatever, but it doesn't really matter. We're just acting on the signals that the system is giving us. So I'm going to shut up right now and just have you witness all of this as it happens, right? And see what we can extract from this price action here. It's all about following the rules. Right now, we're properly sized. We're risking just the right amount. I'll be happy to take profit on this trade once it materializes and grow this little account to that $10,000 mark. It is currently sitting almost at 3,000, and it took close to 2 years to get there, which is 200% gain, which is outperforming Bitcoin. But as a trader, you should be outperforming the market. Traders make more money, right? Because we risk a lot more than investors do. So let's see. Yeah, anyways, I'm rambling. On this particular trade, we should be short until we reclaim the baseline. But since we're also looking at punch-out strategies here, might as well talk about that as well. However, the probabilities of price falling here are higher based on the setup there. The wick is not as significant. The bounce was pretty weak, so it might take us out, but then that gives me even more reason to show you how to enter the recovery mode after that. Hey, you never know with these candles, right? There's no need to worry about what price is going to do, because like I said, your thing here is that you should be following the strategies. Now, ideally, 1 minute time frame 5 would probably be more suitable for this, because 15 for a scalp just takes way too long, right? It's perfect for an intraday trade. When you have a reclaim, consider this loss of baseline over here. If you were to go short and hold it all the way up to this point, a bit of profit throughout the day. But like I said, this is just an example, real example of what to do if you find yourself in this position. If you decided to just go and do this anyways, even though you've been told to wait for A+ setups, for some reason you're betting that this is going to go up because of the signals or whatever. This is not the right way to do this, but if you have good risk management in place, we're not going crazy here. A+ setup, maybe we can leverage up to 5x of our account. Here we're risking 1% of our account, and that's a mosquito bite. That's not gonna hurt you. You can do it. Also, I'm employing my 5 candle rule. If price is not moving in our desired direction within the next 5 candles, then this is how you identify a chop. Chop, chop. It's not posting higher highs, lower lows. It's gonna start chopping. Now, while we're sitting here on our hands, turn on DSR, see what's happening there. It's configured to show us a yearly resistance, and we tapped it again, R1. Remember, this is our second attempt. 1, 2, we're getting rejected by the yearly CPR ceiling. Okay, the momentum thing, don't worry about these crossovers or anything like that. You know, it's the curve that matters, not the actual signals. The C dots are of least significance. This guy over here, look, is right below a choppy block of candles here, so it might struggle to go above it. So DSR can be turned off now. There's no information on it, we already know. But yeah, this is what you do. Nice and easy. Understand your risk, understand the strategies, trust your system, and let it run. Ideally, we want to see candles shift to green over here, maybe give us another bullish punch out, which I think will also fail. That's usually the case after a significant pump like this. We tend to chop. So first sign of resistance, technically we could be taking profit on this. We are already in profit, but like I said, we're so close to the squeeze here that we might as well sacrifice 1% of our account and then later on find a better setup instead of attempting to outsmart the chop here. So binary, right? Either it goes up or goes down. We already have our risk calculated. We have our stop loss placed where it needs to be placed according to the Jackrabbit strategy. 15-minute time frame. It's a tiresome time frame. It takes a long time. But what I'm seeing right now is 1, 2, 3, 4, 5 candles that are refusing to move to the downside. Okay, they're refusing to move to the downside post breakdown on that punch out to the downside. So this could be a sign that maybe we'll get our pop pretty soon. And I want you to just copy this sort of thinking and apply it to your day-to-day analysis of your own charts. Position size, account size, don't worry about that. Worry about your stops. My goal is to bring this bad boy up to 10K. It's going to take another couple of years, but that's just the reality of it. It's a perfect opportunity to show you how this works anyway. If you understand this, you're on the right track. If you don't understand this, then you have a lot more to lose before you start seeing some profitability. I have shown you the same setups where I traded $500,000, 100K, 50K, 30K, $2,000, $1,000, $500 here and there. And my account it usually sits at around 100K, and I found that that's the perfect kind of account for me as my working horse account, like my daily driver account, right? These are the smaller accounts are a lot more difficult to trade because it's easy to just fall into the trap of thinking that it's insignificant, but relative to what, right? What is the significance of this particular account against something like that has $1 million in it? So you actually hold on to bigger accounts and you only look for like very nice A+ setups most of the time. And smaller accounts, you can try a variety of strategies and see what works, what doesn't, and then take it from there. Yeah, if you have any questions, like I said, down in the comments below, leave me your thoughts. Let's talk about this. But it's really, really simple, right? Trading it's about your entries. If you have a good system that gives you exits, it's about strategies most importantly. And the strategies must not be common knowledge, preferably, right? And then risk management is basically how much you're willing to risk. Now, if you're trading this is for Olympics, right? This is just to prove a point. And it's a good track record. You trade an account like $1,000 account to 10K. 5 years later, you will have learned all of this and more. And you can apply for a job as a junior analyst or the executioner, the trader. When you're in profit like this and you're thinking, maybe I should take profit, remember that you have already agreed to take that 1% loss. I talked about the risk to reward ratios and all that, which does not matter to me at all. But if you have like very basic rules, such as when this thing goes up to 1%, I will take some profit. That's your 1R basically. This just needs to jump up to 1%. You take profit, you initiate a runner, and then you look for a better, bigger setup. This is post pump, right? We don't know what is going to happen here. This is a very tight consolidation and we're closing below all baselines except this one right here. So it can go up and down and you just don't need this kind of stress, right? But if you decided to trade this, then by all means go ahead, but make sure that you have some sort of, I call MarketSpy a system, but the reality is you need to add this to your own existing system of, for example, how do you take profit? How do you measure your targets? I don't think you should concern yourself with things like this is an important level, we need to break above it. Remember, this is your yearly resistance zone on CPR. Anything can happen as long as you're sized up properly according to the size of your account, right? If you follow the rules with Poet, it's impossible not to find a good setup. So even if this fails and we initiate another trade, and if that fails and we initiate another trade and that fails, eventually you realize that what's happening here is that you are trading the chop, you're not winning the chop, but the chop has to come to an end eventually. And I'm sure that you will be there, and unless you miss it somehow, if you're sleeping or something like this. But the market will tell you if you're right or wrong almost immediately, as we will see here right now based on what I'm showing you. The market is going to tell you if you're right or wrong, and you should be absolutely fine with that, right? You should not worry about any sort of egotistical assembly here. Compose yourself, compose your trades, let them play out the way they need to play out. There's no good placement for a stop loss, there's no targets to hit, there's no reasoning or applying any sort of logic to a price action, trying to understand it. You will never understand it. Okay, just give up on it and focus your energy on the money management aspect of it, right? And see what the market gives you. We've been over this so many times already. But look, these two candles, so far we have traded two 15-minute candles. It's been 30 minutes already. Now, what does this look like on higher time frames? Nothing. It's a single dip. It's a single 4-hour candle, a couple of them, right? And they're struggling to follow through. Higher time frame candles right now. I'm not going to open the charts for you. I just want you to realize that you don't need to look at it to know it. And we're scalping here, and that's exactly it. So does not matter. Let the market tell you if you're going to win or lose this trade, and then wait for the next setup. Keep allocating 1%, because remember, at one point in time, when the time is right, you will risk again the same amount of a number of contracts, 1% of your account, but it'll just keep going and going and going and going until you hit this exit signal. The exit signal is going to be a shift in the color of the candles, and Armageddon is just going to look like it's cooling off. It's really as simple as that. So you can actually speculate and be completely off about your analysis here, but eventually you're going to get it right. It's just that you need to make sure that that eventuality, before you reach it, when you reach it, you have enough in your account to be able to execute again and again. So basic, and very important to understand this. 5 candles attempting to go to the downside. To me, this is in progress right now. This punch out is in progress, but it looks like it's hesitating. You want to find out when it fails and not be a part of this? Participate. Take what the market gives you. Run with it. There's so many ways to take profit here. We can cast a ladder right now. We can, according to Jackrabbit, that we're trading right now, extremely risky, but we're following the rules, the stop losses and everything. According to the Jackrabbit, these moves don't last that long, because naturally the sandbag itself, the pyramid, is, depending on context, when it appears at the top, it's usually a bearish sign. When it's at the bottom of the trend and we're just starting to cross over the baseline and we've been selling off the day prior, that's a good bullish sign, because they hit the floor, they can't go lower. Here, they're pulling the price down with it. The reaction to the upside might not be as significant. And as soon as we hit that 1%, because it's a scalp, we can and should take 90% out and put a break-even stop loss for the rest. But because this position is so small, we might as well just have it either run up and give us 3 to 4 times the risk, or let it knock us out, let this reset, let it reclaim the baseline, and then we'll go in again and have a bit more next time, right? So these crosses that you see right now, those are ATR signs. Those ATR signs over here, which means price is most likely going to tag them, right? They're being fixed at a distance from where the price is now to where the price was prior to that. From the close to the open to here, this is the distance. And current ATR is right here. So if you were going short, you would wait for an opening at the diamond over here. Check out the video from a couple of nights ago when I talked about this. Another thing I'd like to say is that the baseline has not been retested yet on this dump. That might look like it has right here, which is true. So this might have been a retest, but if we're looking strictly at the diamonds over here, right, we have not retested the diamond just yet. If this goes up, that's our retest, which could also be another point of entry for a short continuation, but we'll just have to wait and see what that looks like. Okay, and that's your framework in terms of how you approach this. You're literally sitting here mind blank, no expectations whatsoever. You already signed the contract, you know what you're going to lose. It's gonna suck, right? 1%, but it's not as bad as we've seen what people do in crypto, degens. They blow up their accounts every day like it's a game. And so you want to avoid that. You want long-term results. And that's all there is to it. That is all there is to it. Looking at our smooth RSI there, it is transitioning, hence why the chop. It is not in the bull territory. It's a transition to the downside of that diamond. We shouldn't be calling it a diamond anymore. It's a black X. It's white diamond, black X, whatever. I think our setup here is going to yield us 1% of the account. But like I said, I am not going to take profit because I want to show you what the whole management mentality is going to be looking like here. How are we going to think about it? Do I take profit, stop losses, trailing stops, and breaking even? Let's get there first, right? Let's see what happens. Stay hydrated, never liquidate it. Drink water. Don't drink coffee to make you anxious. Tea is okay. Decaf. But water. Liquidity. And so the reason I'm doing these videos is because I am reading your comments in our Discord. So I want to be able to guide you along using real examples. And hopefully that answers your questions instead of me just typing like a guru. do this, do that. Freaking long form blog posts about how it's your fault and how you're not right, how you should trade support and resistance and Fibonacci. Let's, while we're waiting for this, right? Support and resistance, magnet zones, magnet levels as I call them. Man, I would like to say something here. I would like to say something. Yeah, like where do we get off as traders to say that we understand where the liquidity is? Blind bats, right? Blind. We're just looking at the charts and we're making stuff up. We're like, oh, it's up there. The liquidity is up there. And support, sometimes it works, sometimes it doesn't. But there's no risk that can be clearly defined at those levels. The only way for us is, if you look at this pump, is to say that we bounce at support over here, and then we start working with our signals to the upside. This is the only way. And then this resistance level failed. This resistance level failed. We actually ran pretty aggressively through it. How many people were short here and now they're trapped, hoping for price to come back down and get them out? Is the market going to give them the chance? Actually, the market doesn't care. Maybe it will, maybe it won't. But to say that, we have to change our words, right? Resistance, liquidity, support it's just that you're so confident when you say that. But really, you don't know, right? This is why I don't believe in giving like price projections and targets intraday based on price action. I personally am not a fan. It's not that I'm not a fan of trading naked price action. It's just that I think you're relying way too much on your intuition, where it doesn't really do anything. It's just makes you think that you're intuitive and you just have a thing for it. That's a gambler's mentality, right? Like I said, system is the only thing, a real system is the only thing that can give you some sort of like boost in probabilities directionally. Everything else is just gambling. Support and resistance is in your mind. It doesn't exist. It's not real, okay? We can slice through it. We can get rejected by it. We can go sideways, not touching it at all for months on end. And depending on how far apart you set them, your support and resistance levels. So we try to organize trading into these, we try to box it in using terminology and what gurus are saying into some sort of defined system based on stuff that doesn't work. You literally need to have something that is very unusual, different from everything else that's out there. If everyone is selling the same course and same concepts, this and that, concepts are just, they're conceptual ideas. In order to actually trade, this is what you do. This is what the firms, trading floors, desks would want you to do, is to manage risk, place a bet, follow a system that tells you why you're doing it, and that's it. And the system is wrong, you don't have to pay the price for it, because a good system is, let's say 40 to 60, right, success rate. It's pretty damn good. People would sell their grandma for this, right? Forget grandma, they'll sell their mom for a 60 to 40 hit rate system. And with MarketSpy, you're getting way more than that, because if you can skip all of this noise and just focus on the essential matters here, what I have been showing you, teaching you. And remember, this comes from a professional field. I was never retail until I decided that I will be one and trade my own money. And so I have seen all sorts of craziness out there. And ego, it's why I have decided to try and become a monk. Didn't quite work out, but I got that experience just to distance myself from my own mind, because I knew going into this I would need to do something completely different to understand the market. And that's not to say that I understand the market, it's just that I understand myself a little better as a result of spending time analyzing charts. And so that's you already or in the future, but these are some alpha points for you to take home. And again, just like with any other trade, in terms of functionality of any particular system, it's either it works or it doesn't. It should be binary. But when it doesn't, your only job is to not be right or beat yourself up because you're wrong, but to simply say that, hey, I haven't really lost anything on this. And I waited a long time to find an A+ setup, S tier setup that was worth all those losers, right? Once again, watch that video with NASDAQ. So 1, 2, 3, 4, 5, we're not moving anywhere on these candles. And ATR, we haven't tested the baseline. So I'm pretty confident. And being confident is it's bad. Don't be confident. But for the sake of saying and getting the message across, pretty confident that we will make some profit here before we get stopped out. Because this is a strategy in action. This is Jackrabbit. And if you know Jackrabbit, you know that it gives you at least something before failing on you. This pyramid over here, printed. Remember, MarketSpy gives you lots of buffer space, lots of room to breathe. You wait for it, you're like, okay, there's a sell signal pyramid. We have a clamp, straight support floor right here, above all baselines. Delta is looking pretty wide. We touch the floor and we have a visible wick. All right. Now, for Jackrabbit, you need to have a wick, otherwise it's not real. And it has to be within the next 2 candles. So once you have a wick, you need to get in and then put a stop loss just below this wick over here. But here's the thing, Jackrabbit is quite different from everything else because it requires you to, once you're in, to take profit at 90% of your position at any sign of resistance. And this is the quickest moving average that we have on here, the 5 EMA. So when you're so close to the 5 EMA, in your mind, you're thinking, okay, if I'm getting in, I'm getting out of here. My stop loss is here. You can actually see the risk to reward ratio here is entry stop loss. It's quite poor. Again, we come back to it not really meaning anything, the risk to reward ratio, but 1 to 1, 0 to -1, 0 to 1, you know. And so sometimes we have gaps. We have really huge gaps where we have a pyramid and there's a candle like this, and then all the resistance is over here. Candle closes, it prints another one, you get in, stop, and you sell at whatever the resistance is. Don't read too much into it, right? So second pyramid, again, we wait until it prints, and this is what we're doing right now, essentially. We're putting our stop loss at the bottom of this thing here, and we're waiting to sell at the first sign of it. Now, the first sign of resistance to me over here, the ATR is so small, is this baseline. So technically, we should be getting out of the baseline because we don't know if it's going to cross over and continue. But at the same time, if you exit this, right, you need to make it worth your while. And so it would be wise to hold it until you lose that baseline again. But in order to do that, price needs to close above the baseline and then either chop or continue pumping higher. So Jackrabbit is not, remember we talked about them showing up at the bottom of a sell-off. At the top, it's a bit more dangerous because there's a chance that they will pull the price down lower. And we're squeezing based on just the overall structure of faster baselines against slower baselines and prices right here. So this is a vortex. 2 things will happen. We get stopped out or this pops. Watch. This is your understanding of what a squeeze is. There's no supply, demand, there's nothing. So MarketSpy itself is what? Yes, it's a system, but what does it actually do? MarketSpy is responsible for creating a new set of patterns that did not exist before. And not many people know about these patterns. It is highly visual and it relies on strategies to execute trades. And these patterns are invisible for most other traders except for MarketSpy. Only the MarketSpy would know that they exist and they're looking at them. There's literally nothing else out there. So that's what MarketSpy is. It's a collection of alpha patterns that most other traders don't know about. Okay? We essentially created a new set of patterns that don't exist in books, don't exist in tutorials, don't exist in trading courses, don't exist in people's minds. And this is why it works. This is why MarketSpy works as intended. The rest of it, for example, oh, you're already in profit, might as well take some profit here. Sure, but like I said, why not wait for it to give you a better setup in case it fails? Because this is not looking too appealing for further upside. True? But it can reverse, and so you're simply following a Jackrabbit strategy here. Most other strategies here, market enemy type 1 is going to be sitting way at the bottom. So this would have to sell off quite aggressively to come down to, yeah, basically below this price action right here. Market enemy type 1 have to be sitting between here. So again, one more time, you're buying support over here for the next A+ setup. There's no market enemy setup anywhere here. We don't see any wicks. We don't see any standout MarketSpy patterns that can be easily identified. And so we ignore that strategy altogether. We're not looking to trade that strategy. But we do have Jackrabbits here. A couple of trades, profitable trades here that you could have taken. The one that's in progress right now is technically a punch out, except the stop loss. Again, watch the video where I talk about how there's a better way to measure this and put a stop loss to just slightly above this based on the wicks over here. But that's to the downside. If for the traders that are trading this strategy, and if this spills and continues, they'll make more money here than attempting to go long for a continuation trade, which it's not looking like it wants to. So 1, 2, 3, 4, 5, one more candle, and if it doesn't go up, then I'm pretty sure we're getting stopped out, and that's the end of the story. We're then looking for the next setup. Seeing a candle like this would be extremely stressful. A couple of minutes ago, we were in profit up to 40% of our account, 0.40, and now we're down to 0.1, and you're thinking, man, maybe I should just take profit here. No, because you have a plan. You're trading the Jackrabbit strategy. You are willing to allow it to fail so you can lose that 1% for a better setup later on. Now, volatility, something like this happening here, is easily doable. So you're like, oh, why don't I just scale in? But scaling in without any sort of confirmation, you have to have proper software like Poet, for example, right? But if you scale in, even here, what if it continues to fall? Now you're holding a bag. You don't have a risk. You don't have anything defined. You cannot use these levels as your stop placement or these wicks over here. You're going to have to hold the bag, and depending on how big you sized up, you might instantly lose like up to like something crazy like 50% of your account. And this is the thing that I wanted to talk about, is all these people on YouTube who are talking about price action, this and that. It appears to me that they always expect you to have a resting limit order sitting, essentially catching a knife at any given time. And that's wrong. That shouldn't be the case. That is just wrong. But yeah, they clearly want you to do that based on the material that I've seen that's out there. Extremely popular. I'm talking about like millions of followers and everything. And it's like, oh, you could have gotten in here on the wick. And it's, yeah, so you're implying that I should have had my limit resting order sitting there. What if it slides through that level and the guru was wrong? Now you're holding a bag. Now you're holding a losing position, and because you didn't plan for it, you had no plan, you can't really take responsibility for it, so you feel bad. You might end up holding it for a couple of months, maybe a year, because you know it wasn't your fault. You didn't do your homework. You just decided to put a resting limit order at that level. Because for some reason, maybe somebody said something, maybe you convinced yourself that it's supposed to hold. The market owes us nothing, right? You can only trade these things with a clearly defined rules-based system where you have stop losses, where you have targets, that doesn't think too much about resistance, support, liquidity pools, this and that, all that nonsense, all that sophistication. Trading should be really dumb and enjoyable. And hopefully I can give you that by showing you how you can benefit by having MarketSpy in your toolbox. Remember, if it's a bullish setup, your stop, this being the low of the day, is protected. All right, it is protected. If it's not, we're expecting one more low lower, then it's going to get taken out and print that low. Baseline is going to be somewhere over here. Once we have that reclaim, we can go long one more time somewhere around here and make up for the loss over here. And you do this, you repeat this again and again until you land on a setup that's going to give you a mega pump or dump, depending on your direction, to make 5-10 times more than what you've lost. Which, if you lost 10 trades in a row and you get one that's like worth 11 trades like that, you're still getting your 1%. You just have to find it. And I'm sure that if you wait long enough, you're gonna get that trade to come your way. Thank you guys for commenting on the videos. The way of the risk to reward ratio trader. Radosh says, thanks CR. Still things to learn, even though I listened many times. We're always learning. Thank you. 8Bear says, love it. Thank you. I always have time to listen to your teachings. Really appreciate it, 80. Thank you. Shinobi says, thank you CR, bringing the alpha once again. Always. Thank you guys for tuning in, listening, and engaging. Because who knows, right? It might be just the thing that you were looking for. And any one of these small elements can incrementally improve your performance. You know, my reward is in heaven, but this is nice to see. And this is why I'm doing this, right? I appreciate you guys. Thank you. Remember, if you're thinking, maybe I should remove my stop loss here, this is a very specific strategy. You can't move it. Binary. Any other time when you're building a position implies that you really don't have a stop loss, or it's really wide apart from your entry to the stop. So you have to keep that in mind, and do not fiddle with your stop loss. Size up accordingly, set your stop, let the market do the rest. Okay, we don't have to do anything. Look, I'm sitting here enjoying my cigar, doing nothing, right? And no, the argument that I don't stand to lose a lot does not apply here, because I'm thinking in terms of percentage gain, and I have 1% to lose. If this was all of my life savings, it'd be a pretty serious situation right now, right? So I don't want to risk more than that, but I do want to grow this account little by little so that I have that metric, right? The Olympic medal, if I need to. Do your own thing, but never compare apples to oranges, right? It's different, but it's not really that different. It's just comparing itself should not. When people are looking at price to earnings ratios and stuff like that, it's still a comparison. You're evaluating, you're keeping busy, this and that. Bank comes out, it says something about raising, like poof, just your analysis is destroyed. There's no reason to do anything. But as a trader, I think it's this simple. You don't really have to do anything. You just have to wait for a setup, identify it according to your system, trade it, risk a consistent amount. So sometimes when you risk 1%, it can yield 10%. Bitcoin jumps by like crazy amounts. So you can hold on to it until your next exit signal. Like I said previously, over here, just before that, over here, before that, over here, it's all the same. Chop, 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 breakdown, stop loss never gets hit. You're holding it, boom. It's not like you're getting in here. You're actually like, depending on where you saw this, where the market was at the time, here's your breakdown, bearish punch out, baseline, it doesn't matter. Your stop loss is right here. You're below baselines, equilibrium 1. You never got hit by the stop loss right here. If you place it right here at the peak, you never got hit and you got paid out quite nicely. And then you exit it right here. It's very simple. All right. I have shared everything that I had on my mind, so I'm gonna go have some dinner, come back to this and see if we lost the trade or if we want to trade. And then we're going to wait for price to reset, give us another trade opportunity, and I'll take it from there and show you how to enter the recovery mode. Okay, ladies and gentlemen, we are back after a short break. So at the time of this recording, obviously I'm going to cut out all the silent parts where we were just sitting here waiting for these candles to transform. 1, 2, 3, 4, 5, 6, 7 15-minute candles. Trader's job is not easy. Patience, doing nothing. We have been recording for 1 hour and 33 minutes, ladies and gentlemen. This candle is now transitioning. Our stop loss is still safe. And like I said, like this is basically, we're now going to have a baseline reclaim. If it doesn't aggressively pump through that purple line, then we should probably take profit and that's it. Call it a trade, call it a scalp, whatever. But if it does, we may add to this position above the baseline if it holds up there. Let's see what happens. It's still too early to celebrate, but we're getting there. We're close to the final play. Okay, this is the season finale for this Jackrabbit scalp, but technically you're already in profit, and this is what scalping looks like. If you're risking 1%, the system tells us that we need to exit at 90%, but I want to show you something else here based on the vortex squeeze that we're seeing here, the convergence of all the signals here. We expect price to turn green on the candle. It's literally shifting colors. You hit your 1R when you're at 1% because that's what you're risking here. Now, in the beginning, remember when we started this community, you learn how to take profit on time. You learn how to hold your positions and stay underwater. You learn all those things, and now it is time to actually talk about trading for bigger ranges and holding on to your positions, adding to your positions, and using special techniques to trail your stops, adjusting your points of entry relative to where your previous entry was. But this is just to say that this Jackrabbit is now in profit, and there's a sign of resistance. We should be exiting the position, but let's get to at least 1R. Let's not do anything. Remember, trading is not about doing, it's about observing, being patient, and sitting on your hands for the most part. If this setup fails and it takes out the stop, it only means that we're going to be looking at a better setup. That's all it means, which is going to be more rewarding than attempting to do anything here. Or it could be a nothing bugger. Who knows? I certainly don't. Do you know? Do you know where this is going? 40K? 50? Trade the system, guys. Trade what's in front of you. No need to speculate. No need to have price targets. Macro, we already know this is going up. So we have just hit our predicted ATR value right here on this plus. Tapped it, and this is an appropriate power move for this type of setup. All right. The next candle is expected to go up to wherever this plus is going to end up. So it's calculating the ATR in real time. New candle is about to open. Either it continues or finally breaks down and goes down. Little note here, this is a baseline retest. Outside of this baseline retest where there are no diamonds. So here you can make a whole bunch of mistakes, longing it, shorting it, but as long as you stick close to the baseline and you exit your losing trades on time immediately when you see a diamond or a directional shift, then you should be okay. This is also something that I talked about in the previous video. We're 1% of our account, so technically we reached our 1R on this trade. We can either take profit or wait for it to go higher. Now, because I don't think this is an evident A+ setup, I'm going to wait and see if we break the purple and jump above it. Baseline retest for a potential bearish continuation, but we're at 1% on this trade. So this is like the basics of how you can join the 1% club, right? I've been recording for 1 hour and 47 minutes. An account like this, if you're getting paid $30 on a profitable trade in 2 hours, that's minimum wage right here. But I would like to put a couple of things aside and say that if you wanted to replace your job and you have a little cushion to allow you to be wrong for the next year and a half, for example, right? You can totally transition to earning the same amount, but doing this, okay? We're not talking about making millions because it's not realistic with an account of this size. But if you were to think of it in this way, where you say, I don't want to be part of a system, a certain system that you're a part of. What do they say? Breaking the matrix, escaping the matrix or something like that, yeah. So if you were to think of it this way, I think you can see how this is doable. This is totally doable and you can get away with it. The interesting thing about this is that if you become a profitable trader and you start trading this the way we trade, what makes you think you can work less hours than some guy on Wall Street who works for a desk, especially a crypto trading desk? They go on these 18-hour shifts. 18-hour shifts, minimum wage. Is it doable? Absolutely. Are you going to be driving Lambos and eating Wagyu steak every Friday? Probably not. But you can grind up there. You can get certifications. You can go for your CFA. You can go for a prop firm. You can do a lot of things. You can find partners to. So if I gave you $1,000 and I say, trade it for 5 years and show me the results at the end of the 5-year cycle. And if you're profitable, why would I not trust you with $1 million, 2, 10, 50 for you to manage? Because you will have established some sort of system. But by that time, you'll be like, give me a penny and I'll turn it into $1. That's all we want to hear. That's all we need. And if that's the case, yeah, this is the correct way to think about it. What's not correct is falling for empty promises where traders tell you that you can quit your job doing this. You don't quit it, you replace it. You continue working the same amount of hours, maybe even more, like I said. But the difference is now you work for yourself, you trade your own capital, you're fully responsible, and your paycheck gets delayed every few months when we have no action at all. And then you can have multiple accounts. You can have one position that's riding the trend. And while keeping an eye on that, you can trade a smaller account like this for whatever the purpose is. To prove a point, to get an Olympics qualification or what have you. Trading competitions, this and that. Just don't force yourself to do this. Go with ease, easy mind, easy grind, right? But you will have to sacrifice a lot of things to make it happen that you're comfortable with right now. So if you have a good paying job, you can do this on the side and you'll call this as an additional revenue stream. And I recommend you do that. For those of you who are looking to completely shift into trading full-time, think of it this way. You're merely replacing your current job, current pay, but with this. And for a number of years, you'll have to prove to yourself that this is doable. Because you can always come back to your job, your profession, your field. And yeah, this is probably the best way to think about it. Not, hey, buy my course and I'm going to show you how you can become a multi-million-dollar trader, profitable trader within a year. It could happen with a system like this. You just land on those certain trades that start as a scalp and end up working in your favor. And somehow you're now sitting on a profitable trade that's refusing to go down, especially if you're trading like crypto, futures, and other things like that. Ignore options, too many headaches, news, dangerous. You need a good amount of money in order to be able to navigate options. Don't do it with small money, but Bitcoin derivatives, for example, or crypto derivatives in general, perpetual swaps. There's lots of alpha here. You have an edge. I'm sharing MarketSpy with you. You can turn it into something functional. So that's the thought process here. Yeah, so it's been 2 hours, but I gotta go somewhere. I'm gonna let it run because, like I said, we already risked 1%. And 1%, if this gets us to $100 profitable trade, then, you know, that's all we need. So I'll see you in a bit. Well, ladies and gentlemen, welcome back. All right, let's take a look. I had some dinner. I walked away. We had a stop over here. We got triggered. And we printed another setup over here. At which point I went short. Yeah, so we had a long position over here. Price came down, 1% risk, knocked us out. And as you can see, immediately after that, we printed a 15-minute bearish punch out right here. And price dumped, came back and retested that. I decided to go in again and put my stop loss over here, 1%. We reached our 1-to-1 R. Let's take a look. Minus 0.5, and we dropped down by about $500 thereabouts. Okay, right here, and exit roughly at around this line, which brings us to 1R. Because the downtrend was very strong, VVS momentum was losing its strength. This RSI was in the bear lane. Okay, it was not transitioning anymore. It's clearly bearish. So I doubled down on my position here, and we got out and closed not quite $100, but 63. Now we had a loss as well, so that had to be accounted for. Otherwise, it would have been, I believe we lost somewhere around $30. As you remember, putting a stop at the previous setup over here would have cost us roughly $30. We do the math, and that's our $100. Now, unfortunately, it is very late, and I'm not going to be able to continue to track this, but it's been how long? So we decided to go long, according to the system, Jackrabbit. It gave us 1R, Jackrabbit. We followed the rules. We should have taken profit over here. We didn't, but I wanted to show you what this looks like when a setup fails and a better one is presented. So we talked about that. Why would you chase this? We're at the top, maybe look for something better, A+. So we have it right here. So how much time passed since up to this candle? It's been 5 hours. Guys, 5 hours. But anyways, Max 7 failed momentum, bearish punch out, retest, continuation, and we're done for the day. This is it. We got our 1R, or whatever we risk, we got it back. Whatever we lost, we got it back. We're sitting at $63 gained on this account at 2.19% of our total net worth. So that's it. Hopefully you enjoyed it. Very simple. I already forgot what I was talking about prior to this, but you get the point. Rewind, rewatch, and I wish you all the best, and I'll see you in our Discord. Thank you for watching, ladies and gentlemen. Leave a like. God, I can't believe I'm saying this. Comment and share and subscribe. We will talk about this and more on Saturday, and I'm looking forward to sharing more with you. Cheers, guys. Stay hydrated, never liquidated.